Hey there, it's Trisha with Easy E-mini Trade, and I'm just going to go over how, if you were looking at the market profile today, you could have taken some pullback entries if you were so inclined. And I'm going to be doing a webinar on Wednesday at 4 p.m. where I'll talk a little bit more in detail how you can trade off the areas of the market profile. And then I'll also go over setting up your trading plan as well as recording and tracking your trades. You need to know basically a little more than just how to pull the trigger to get into the trade so you can live to survive another trading day. All right, so let me just quickly show you today, and send me an email if you have any questions. If you want more info on the webinar, just go to my site, easyeminitrade.com, and click on the upcoming webinar tab at the top. Okay, so I have NQ here on an 8-range chart. It doesn't really matter what chart you trade it from. The value areas are going to be the same. So I've got support resistance areas marked on this. And I do want to do a video to show you how you can come up with, in this case, resistance areas into all new territory. Today, once we got above the 80-72-50 area, it was brand new territory where NQ has never been. So I like to have areas to shoot for. I'll try to do a video tomorrow on that so you guys can have an idea of how you can make that work for you. Okay, so value area is the area in blue here. So the top area here is fair value area high. This is the VWAP, and then this is fair value area low. So when you're in an uptrend, generally what you're going to find is price is going to hang out in this little band above the value area. And basically this is a heads up for overbought. That doesn't mean the price still can't go higher in overbought, but generally what you'll find is it will move higher into that band and then pull back to the lower edge of that band, move higher, lower edge of the band, higher, lower edge of the band. So this is fairly early. It's right off the open, so I wouldn't be too quick to jump in on a pullback on that. And then the other option is after it's been open for a couple minutes or however long you determine you're okay to take a trade. I usually use 9:35 or later, but we'll be looking for a pullback here to the fair value area high. And ideally what we'd like to see is some divergence off there, or something like this where you've got that 40-point gap between the stochastics if you're using the stochastics. So I don't really get that here on this pullback. However, if you look at it on a 1-minute chart at that same time, you can see it pulls back to fair value area high, and then we get this bullish candle with the bottoming tail here, bouncing off of the 50% fib retracement as well. That's what those dots are. And obviously big bottoming tail telling us that buyers pushed it up. So if you were trying to find a way into the moving market, you could buy above this candle here, bouncing off of the fair value area high. And then what I would do is I would look to the area that was a little common between the preceding bars. So I would look at this area right here. This looks like a common area, right? Support, support. Then you have the close, the open and close, general area of the high. So if you were buying above this candle here, let's say at 87, above 87.75, you would just be aware that it might struggle up here at that area that was created up here as resistance at 92 and change. And you can continue to do the same thing every time it got to fair value area high, as long as it was continuing to move higher. You're not looking for bounces for pullback entries unless you have some momentum, or obviously the market is a strong trending move. So generally what you're going to find in a market where we're coming into brand new territory is that it kind of creeps its way higher. And new territory, I mean, we've never been here before. So as it creeps higher, it pulls back, higher, pulls back, higher, pulls back. So it does require some patience to sit through those. And so if you progress up here on the 8 range, looking at the same thing here around 10 o'clock, 10:20, as you're looking at right here, you can look for those little opportunities off of fair value area high. Again, I would be looking for divergence for a bounce off there, or this 40-point gap between the two stochastics, because this is telling us that likely it's going to go sideways or bounce off that wherever it's at. And so that would be right here. So you could actually buy, above any one of these candles here, or if you wanted to be very aggressive, just put your order in a couple ticks above fair value area high, and then you would be looking at the area that last held, which is up here at 95. And then if it can continue higher, then you're looking at the high of the day. And then I always make reference to the round number area. That's generally an area where NQ will typically react.